Joey Hansen is a seasoned mortgage sales leader at Huntington National Bank who has seen just about every kind of market this industry can throw at you, from boom times to rate shocks and everything in between. She sat down with me at the gathering. In this conversation, we dig into how she built a referral-driven business, what today's affordability crunch really looks like at the kitchen table, how she's navigating the rate lock-in effect, shifting realtor dynamics, and rapidly evolving borrower expectations. Joey also shares how she talks borrowers through persistent misconceptions, what's changed in her own process over the last year, as well as the advice she gives LOs who are wondering if they should still keep grinding in this market. Joey, thank you for joining me.
Thank you so much for the invitation. What an honor.
Yes, ma'am. Happy to have you here. Can you, before we get into some of the originator-specific stuff, can you give me, I guess, like a Cliff Notes version of how you got into the industry, what your market looks like, who your borrower or your customer type is?
Sure. Well, I always wanted to be a loan officer.
Yeah.
Said no one ever.
Sure, right.
A friend said, "You'd be good at this, so you should do it." So at the time I was living in Colorado, and my husband and I picked up a move to North Carolina in 2003 to give this whole mortgage thing a shot. And I jumped right into being a loan officer. I've never been in any other aspect of the industry, didn't come from title or processing or anything else. So I kind of know just this one thing in the industry. And I've originated and lived in 3 different states in the 23 years I've been doing this. I started in North Carolina, then moved to Texas in lending, and now I've been in Colorado for a long time, and Colorado is my home. And, I would say my market, I'm in Colorado Springs, Colorado. You ever been there? Mm-hmm. Well, you were there last year, of course. I'd say our market is, we're in the moderate, but still a little bit upper moderate of affordability, especially in Colorado Springs. People think Colorado is expensive everywhere. It's really not, just in some pockets, I think. So that's good and bad in our area. It's good in that you have a wide variety of people that can buy homes. It's bad in that affordability is still an issue. So we can talk more about that.
What's the medium home price there around about?
It's probably around 500, upper 4s. Depending on specifically where you are. And then Denver, of course, is significantly higher.
Right. Let me ask you this, if you would have known, so that's pretty wild. I got into the industry, I became an originator through a friend, and it was originally supposed to be supplemental income really for me. I was an English professor. And my friend, yes, ma'am. And my friend, who's a great originator, he's a branch manager, and he was not, he was looking for someone that could speak to larger groups of people, like go to lunch and learns for realtors or first-time home buyer seminars and educate them, right? So he kind of recruited me to fill that part of his business. But I had something else to kind of go. I fell into it, and I dove into it after I got into it. But I didn't. I mean, yours is the opposite. You really went on a wing and a prayer. If you knew, would you have made that same jump 6 months after moving? And being a loan originator for 6 months, did you have any idea what you were getting into, or were you immediately regretting your move a couple months in?
Never regretted it.
Oh, really?
Immediately, I thought, this is really interesting. And I didn't know what I didn't know, and I did jump in, and I jumped into 100% commission and all the things, and I was like, why not? I was younger, so it's the time to, for me, it was an easy time to make that risk, to take a risk like that. But no, pretty instantly, I was like, okay, I like this. I really liked the finance piece, the way it's like putting together a puzzle. I liked the fact that it really was helping people in a very significant piece of their lives, and then just the people part of it. So it really does combine, and I've said that, I continue to say that today. It's why I love the business. It's the personal finance piece that I love, and it is the people aspect that I love, and we get to combine those two. I mean, what else? Is as good as that.
Right. Now, you've been in the industry since 2003, so you've seen your fair share of market cycles and booms and busts. Where does this market cycle scale or fall into the previous cycles that you've been a part of? Because to me, I've been in the industry since I've been maybe 15 years now, and this is particular. There's this industry right now. The market cycle feels like there's like an eerie calm. You know what I mean? Where like there was panic and despair for the past couple of years, but this last year or two, I feel like things have kind of settled out. I mean, they're not good,
Right.
right? But it's not the doom and gloom that it was previously. Eerie calm is the only way that I know how to describe it. What
I
do
called
you?
it a false summit.
Okay, yeah,
Right?
that works.
I live in Colorado. We summit. Because you think that we're like, quarter percent better in rates.
Right.
We're like so close to magic, right? To really getting people into more homes, but we're just not quite there. So
Yeah.
this one's tough. I mean, I think the drastic change in rates that we saw beginning in 22 and the way that ran up so fast, and it really put the brakes on a lot of activity and then hurt a lot of loan officers and companies. And I think in some ways we're still kind of recovering from some of that. We lost a lot of people in the business who were no longer able to survive when rates jumped up so much. So this one's different in that it just doesn't feel the same as the financial crisis
Right.
or the other cycles. At the same time, I feel like we're not in that bad of a spot right now.
Yeah.
I may not be right in that, but I feel like we are not in that bad of a spot right now.
Yeah, it's like it could be better for sure.
Could be better.
But it could be way worse. It
Certainly.
could be back in the 7 ranges, just
That's
from a
right.
rate perspective, right?
That's right.
Yeah.
So
Speaking of rates, I wanted to ask you about your experience. You know, your part of the world and the lock-in effect, because that's been a constant in the mortgage news cycle over the past several years. And I was telling you earlier that I had just I skimmed over an article this morning. I didn't have time to get into the specifics of it, but that the lock-in effect is generally kind of dissipating across the country, but that varies. You know, national news is great until you talk to someone about their local market. And it's like,
Right.
You know what I mean? So in your market, does the lock-in effect, is that still at play? What do those conversations with borrowers or customers look like around rates right now?
I think there will be a degree of lock-in effect for a good long while.
Right.
So you can't say it's not there, but I also don't think it's there to the degree that it was. And I do see it easing up. Now, I think about my own home. I'm locked in my own home. Even if I considered moving, I really would be like, where am I going to get my 2.25% rate?
Yeah.
You know, so it affects even me when I think about that. At the same time, I think people can only stay in a house they don't love, all those things for so long, right? At some point you get weary of of your situation, and people do continue to change jobs, get divorced, have family tragedies, all the things. And so some of that's forced to get out of the lock-in effect. Some of it's just they're just weary of how much longer can I wait for this? And let's just go.
Yeah.
And so I see it easing up.
I wanted to talk to you more about the conversations that you're having with borrowers right now, and I was curious to know what is one of the most common misconceptions that you're dealing with, or you're having to field, I guess, with customers whenever they first come. It could be both. Whenever they first come to you, and then throughout the origination process.
That's a great question, and I probably have a couple of answers, but I'll maybe give one. I think some people still think that the lowest rate that I'm quoted is absolutely the best for me. And oftentimes they do not have education around what actually goes into that rate
Right.
and how that affects other things. And so I think about, for competitiveness, when people are shopping for their lender, they'll see something online or they'll hear something from their friend or whatever about what rate they can get from X lender or X loan officer, and don't have the education around that to really understand what that means. And therefore they may actually walk into a loan was not the best for them because they just didn't take the time to thoroughly vet it or just to get some more education around it. So that's one thing that's not, it's not always prevalent, but it's the first thing that came to my mind when you asked the question.
Let me ask you about that conversation. So is that something that you're having to field or deal with like early on in the process, like the initial loan consult, or whenever you're perhaps later on in the rate lock situation, are people kind of like crawfishing back and maybe trying to rate shop you? Is that a
Sure.
common issue?
To a degree, yes. I mean, it happens at the beginning of the process and sometimes in the middle of the process, depending on, where rates are and things like that. But I lost my thought on that. It was going to be really good, though, I'm sure.
Well, one of the misconceptions I was curious about is there's so much data and information now coming out about the number of home buyer or potential home buyers that are coming to LOs that have already consulted chat or AI, right? What does that look like from your seat? Are you having to as the average buyer now that you're dealing with, are they more informed coming to talk to you because they've consulted AI? And is the consultation that they're receiving, is it good?
Some are, not everyone is. I actually had a situation not too long ago that someone emailed me very specific questions and they wanted to know, 4 or 5 different things. And they were so specific that I literally thought it was like a secret shopper. You know how companies will have, I was like very convinced it was a secret shopper. It was not. Turns out, I think they just had probably used AI and they were, emailing this list of questions to various lenders.
Right.
So it happens some.
So around the conversation or the topic of affordability, besides the rates, is there any other, what do those conversations look like, again, with your customers, with your demographic, outside of rates? Or is rates all that they're really, is their concept of affordability tied just centrally to rates and then nothing else? Like, where does insurance tie into this conversation? Is that something that kind of like hits them by surprise, or?
Certainly can.
Yeah.
Certainly can. And that's a hard one. I'm certainly encouraging all my clients to get your homeowner's insurance quote up front because you don't know what that could do. I think at the end of the day, people really want to know what am I going to pay for the home? What's my payment going to be? What's the rate? And what do I have to bring to closing to make this all happen?
Right.
Those are really, at the end of the day, the majority of people that I talk to, that's what they want to know. And then they want really good advice and guidance along the way to get there. So if all of those things align, that's affordability to them. And sometimes the person that makes a significant amount of money in no way wants to, buy all the home they can qualify for.
Yeah.
They have specific reasons why they want to keep their payments low.
Right.
So as long as that meets their, what's my payment going to be? What's the rate? What do I have to bring to closing to make this happen? And what am I paying for this home? If those things align, the affordability is there.
Okay. Last question I've got for you. This is you can answer it in multiple ways. It's a 12 to 18 month retrospective, I guess, question. So I'm curious to know if there's one or two things. Is there something that you've changed over the last 12 to 18 months that's paid off dividends for your business? Or is there, alternate question, is there something that worked over the last, that used to work, that over the last 12 to 18 months is no longer working? And that could be anything from your relationships with your referral partners or with marketing techniques with home buyers.
Well, that is a funny and timely question because I just a few months ago actually changed companies. Okay. For the first time, and it had been 12 years at my previous company. And so for me, what's changed over the last 12 to 18 months? Number one, that. Two, and one of the reasons why I changed was just an opportunity to grow and help build something and help others succeed too. And so I'm in this now building, recruiting, growing phase that I've never been in before. So that part is really exciting. So that's definitely different over last year. And I'm a little bit starting over with some of my referral partners. I came from a real estate joint venture. I was in a JV for almost 12 years. So I had some dedicated, referral partners within that joint venture, the real estate company. Obviously could not take all those people with me when I exited the JV. So I'm in rebuild mode with referral partners. So part of that's been fun. It's brought some of the fun back for me to lending, if that makes sense. And part of it's just a challenge too. And so yeah, I'm in this new place, just than I was a few months ago. So it's kind of exciting.
So I've got a follow-up question on that. This is kind of a half-hearted joke of a question, but so we work with, in this world, do you know how easy it is to get caught up in the technology whirlwind? And and I see often, thinking of someone that's decided to leave one company and go to another, how much of a tech stack really ever factors into your decision at the end of the day, right? I would assume that it is a factor in there. I also, from my experience, it's not as much of a factor as companies trying to recruit with a tech stack make it out to be. So from you, what about you?
I would agree with that statement. It's important. It's not everything.
Yeah.
There are other things that are important. I mean, do you get loans closed on time?
Right.
And I vetted this current company that I'm with probably more than they were probably tired of my questions, because I really wanted to make sure I was number one, making a good decision. And two, that they did have all the things that were important to me. Technology is a piece of it. It is not the most important thing, in my opinion.
Yeah.
Now, that being said, if you're going significantly backwards,
Right.
then that's not good either, right? Fortunately, where I am now is very forward thinking. We're a bank, but we're very forward thinking. And I think that there's a lot of really good things there, including the technology. So, yeah.
Well, and the fact that they answered, like you said, you thought that they were probably tired of answering my questions, but they answered them anyway. So that speaks to
And
a
I
relationship
think they
being a
enjoyed
primary
it.
decision making factor, right?
Yeah, agree.
All right. Well, thank you so much.
Thank you, Zeb.
Yep. Nice to meet you.